Separate financial statements. What is separate financial statement? The objective of the standard is to prescribe the accounting and disclosure requirement for an investment in the subsidiary, investment in joint venture, investment in associate, and entity per person. Separate financial statement. So we have a financial statement for what? Our business purpose. When you create a separate financial statement, when when we receive our acquired when we do a joint business, when we do a joint venture, when we associate ourselves with other person to do an activity, when the profit and loss are arising from that activity, asset are involved in that activity, liability accrue from that activity, which is a joint venture, which is a joint subsidiary, which is an associated enterprises. Such a way, separate financial statements required. Standard shall be applied in accounting of investment in subsidiaries, investment in joint ventures, and investment associate when the entity elects or it's required by law or to present separate financial statements. When the standard applies and it requires, you need to do it. Separate financial statement are the presented by the parent, that is investor with the control of the subsidiary. Who need to create the separate financial statement? Only the parent company who is the major deal in this venture, or an investor with a joint control of a significant influence over an investee in which the investment or accounted for a cost or in accordance with India's 109 financial instruments. So the person who has the major influence, the person who is the investee, person whose investment should always to be counted, who has a joint control. How to account it in the cost if you don't know. If not, now as per India's 9 should be considered as a financial instrument. Separate financial statements are those presented in addition to consolidated financial statements or in addition to the financial statements. So these separate financial statement should addition to the consolidated financial statement. You can't say I have provided consolidated financial statement, so the separate financial statement is not required. You can't say it is addition to it, or in addition to a financial statement in which investment and associate or investment in joint venture are accounted for using an equity method other than the following seconds. So it is when this other than these circumstances, if it been accounted as an equity method of a such kind of investment in a joint venture and associate, then it should be separate financial statement test be prepared. That's exemption when the equity may present separate financial statement as its only financial statement. If it is exempt from consolidated or from applied wide equity method for accounting. So the entity may present separate. That entity is providing separate financial statement, and so if so, they are exempted from the consolidated financial statement. Even investment entity shall present separate financial statement as its only financial statement if it is required throughout the current period, throughout the all corresponding period to apply the exemption to consolidated of all subsidiaries. So investment should be presented in what separate financial statement. It's an exemption to that. When they provide in it should be an investment entity and they should have a separate financial statement and that should be their only financial statement. They should have consolidated financial statement. And if it is required throughout the current year and all comparative period. So this year and previous year comparison with you, they should have a separate financial statement. That's the only financial statement they should have and to apply exemption to consolidation from all its subsidiaries. So they should not have the consolidated financial statements. If it's so, you are required to prepare additional separate financial statement because the business has only purpose is to do business to represent this joint venture, represent this associate. There's no other thing. Only their business is to come together and do the business. That business itself is enough to show all the statements. If it is being enough, you don't want to do consolidated financial statement. That is the intent of this accounting standard. Preparation of separate financial statement. A separate financial statement, what to do, why to do, எதுக்கு வேணும்? When an entity prepares a separate financial statement, it shall account for investment in subsidiaries. It shall account for investment joint venture associates. ஸோ அவங்க ஜாயின்ட் வெஞ்சருக்கும் இன்வெஸ்ட்மெண்ட் சப்சிடரிஸ்க்கும் அசோசியேட்ஸ்க்கும் they can account for it. எந்த வேலை அக்கௌண்ட் பண்ணணும் அண்ட் காஸ்ட் இந்த காஸ்ட் they should account in accordance with Ind AS 109. ஸோ காஸ்ட்ல அக்கௌண்ட் பண்ணுறது மட்டும் இல்லை, தி should be if not காஸ்ட்ல அக்கௌண்ட் பண்ண முடியலைன்னா financial statement. What is that? Financial cost, financial instrument they should account as per Ind AS 109. Entity shall apply the same accounting for each category of investment. Every category of investment should be accounted as cost or as financial instrument as per Ind AS 109. Investment accounted at cost shall be accounted in accordance with the Ind AS 105. Non-current asset held for sale and discontinued operation when they are classified as held as sale or to include a disposed group and classify as held as sale. The measurement of the investment is accounted for the accordance with Ind AS 109 is not changed in any circumstances. So the measurement, so as per Ind AS 109 financial instrument, it should not be changed in any circumstance. என்ன circumstance change பண்ணக்கூடாது. So the measurement, the investment is accounted as in accordance with Ind AS 109. It should be maintained in 109, should not be changed. If the entity elects to measure the investment in associate or joint venture at a fair value through profit and loss in accordance with Ind AS 109, it shall also account for its investment in the same way in separate financial statements. So how you value your investment, fair value of a joint venture, consolidated financial associates, yeah, in as per India's 109 financial instrument, as per the same value, should hold the value in separate financial statement. You should not show two different. வித்தியாசம்னு சொல்லக்கூடாது. Both should be in the same value. One thing is higher, one thing is lower. It's not appropriate. Appropriate thing is whatever you following in your financial statement, that should be the value in a separate financial statement. அப்படி காப்பி பண்ணி பேஸ்ட் பண்ணலாம். If a parent is required in accordance with Ind AS 110 to measure its investment in subsidiaries as well as fair value through profit and loss in accordance with Ind AS 109, it shall also account for the investment in subsidiaries in the same way in its separate financial statements. So, Ind AS 110 la how you measure its in subsidiaries? The fair value. A fair value na வேலை கூடும் இறங்கும். So, the change which is being considered and taken to P&L account. That's well and good. So when it is taken in 109 financial instrument, it shall also account for investment. So it should also account for investment in the same way how it is taken in the books of account in their financial statement. That same value will be taken in the separate financial statement. The entity shall recognize a dividend from a subsidiary. An entity may recognize dividend from joint venture. Entity may recognize dividend in associate in profit and loss account in separate financial statement when it is a right to receive the dividend is established. So when you receive a dividend, how you account it? The dividend should be accounted in P&L account. What? Yes, it should be accounted in P&L account. It should not be accounted anywhere. Why P&L account? As per separate financial statement, you should account in P&L account that has been given. Disclosure. The entity shall apply all applicable NDEs in providing disclosure in separate financial statement, including specific disclosures as required by standard. Whatever the disclosure as per the separate financial statement, you should give. And if any other areas has said to disclose something, that disclosure should be given in the notes to account as per that NDAS that is being in this observation. Thank you. Om Namah Shivaya.